And what about your own investing? Are you buying properties too?
Well, I have one property up in Grand Prairie, Alberta. So that's where I normally live and go to work. And I bought a duplex, or it's like a legal up down. I don't know if you would call it a duplex in Ontario, but basically it's one suite that's totally separate and legal on the upstairs, and then the same thing for the downstairs. Totally detached, um, meaning it's one structure, but then the suites are not connected
Hmm.
whatsoever.
Hmm.
And so I've been renting out the basement suite for the past year and a half. And then I was living in the upstairs suite. At one point, I had a roommate, and that was for about 6 months until I started getting into YouTube. And then I realized I kind of need some more free space for myself.
Quiet space
'Cause-
too. Yeah.
yeah, because the upstairs was a little bit small, and it was difficult to have two guys up there and then me doing my YouTube in the spare time that he was around. So I don't want to bother someone. I'd just rather have the space to myself and be able to focus on YouTube.
Awesome. That's
Yeah.
cool. Yeah. Can you share some of the numbers? Like what would that property cost?
Yeah. So it cost 350,000 for the house. I think it's 2,000 square feet. So property
Wait,
values
wait,
are
wait, wait. Did you
pretty.
say it was small earlier?
Well, that includes the basement,
Okay,
uh,
okay, okay.
the lower area. Yeah. But I should say that properties are pretty cheap up in Grand Prairie for the square footage.
Hmm.
So I guess the upstairs is 1,000 and then the downstairs is 1,000. And so 350, I put down 20%, got a little bit of help from my dad for the loan, and then I paid him back. Um, and nowadays, I don't totally know what it's worth. I think the Grand Prairie market's been doing pretty well, but I've been renting out the basement suite for 1,200 per month, basically straight for the past year and a half.
Hmm. Is
Yeah,
that plus
before
utilities or anything
they
inclusive?
pay utilities.
All
Yeah,
utilities?
yeah.
Nice.
Oh, sorry. I pay a little bit of the water bill.
Hmm.
So we split the water bill just because they don't separate it for the upper suite and the lower suite. It's
Hmm.
just the gas and electric is separate for the suites.
Oh,
They
nice.
have independent meters.
Oh,
Yeah.
do you have
So,
two furnaces then? Two water heaters?
yeah, two furnaces, two on demand hot water systems. So it's pretty perfect for setting up a rental.
Was this purpose built?
Yeah, like it was supposed to be two legal suites.
Oh,
It was
cool.
built from the get go like that. Some people do the modifications after, but yeah, this one was straight from the get go, just so that landlords could set up a bunch of renters because the Grand Prairie market is heavily rented, and you'll find a lot of these duplexes and fourplexes, even quite a lot around the city. And so
Hmm.
they've set it up that way for a lot of the houses.
Do you know what industry most of the folks are in the city? Are they all pulp and
Definitely
paper?
oil.
Mostly oil.
Definitely oil. There's a lot of natural gas reserves up near Grand Prairie, and then oil companies, pipeline companies like TransCanada, um, Enbridge, those types of companies. So
Hmm.
typical Alberta, definitely up in the oil.
Right.
And yeah, so there's a lot of transient people, so they're moving up and coming out quite frequently, which is why there's a lot of renters.
Hmm.
Yeah,
Do you know what your main floor would rent for?
I would say 1,500, and then they would pay their own utilities. Um, that would be, yeah, I would say I could get that because the upstairs is, it feels bigger and it feels a little bit nicer than the downstairs. It's kind of got like an island area, whereas the downstairs kitchen is just one side of the wall.
Hmm.
So 1,500 plus 1,200, be getting about 2,700, and then they would be paying their own utilities. So uh, the mortgage payment based on my interest rate is close to 1,300. It's like 1,295. So then above the mortgage payment, you'd be getting 1,400. Um, and so whatever the other costs are, so like property taxes could be $400 a month. That's one thing that's really expensive in Grand Prairie is the property taxes because
Excuse me,
there's a
did you say
lot of,
1400?
oh no, no, 400.
400 a month.
Like,
Okay. That's
yeah,
still,
it's like,
that's pretty steep compared
yeah,
to the
yeah.
price of the house.
Oh, yes. It's like 360 to 380, somewhere around there. But it's because they have so much snow removal and they have to repair the roads all the time up in Grand Prairie because the weather is just ridiculous. And so after that, 1400 minus the 400, so you'd be about 1,000 per month, minus say a few other expenses. So you could be cash flowing 700, I think is what I calculated once.
That's pretty good.
Yeah. Yeah, it's a good rental market for sure. But the property prices are cheap.
Have they come down? Have you been monitoring? Like, did they come down like over the last 10 years? Now, do you think it's on the way up? Hopefully I'm not leading you here.
They did come down. Like when I bought the house, I bought it for 350 and the previous owner bought it for 367 or something like that.
Okay.
So it did come down. I think that was only a period of 4 or 5 years. But then after COVID, Grand Prairie's been doing pretty well because I don't know, it's pretty insulated from oil fluctuations, unlike Fort McMurray or other different cities like Calgary in Alberta. Because they have a lot of natural gas and a bunch of different industries in Grand Prairie. So it's
Right.
remained relatively constant. I don't think it's gone down at all. I think it's gone up a little bit, but yeah, it's pretty steady.
Right. That's a good lesson,
Yeah.
actually. Diverse economy.
Yeah, yeah. I know because in Fort McMurray, house prices just dived after 2014, and people would definitely be underwater on their mortgages in some situations.
That's actually a good point. I think real estate investors need to remember that. Like, you can lose more than your investment.
Yeah,
Right? Because the property value can drop below whatever your down payment was, and now you owe money. Right?
yeah,
So return on investment is actually a bit of a challenging calculation, because you and I are also in the stock market. The worst we can lose is our investment. We're not liable for anything beyond that.
that's true.
Right?
unless you plan on going on margin, but
Yeah,
yeah,
that's
most
different.
of us avoid that.
Yeah, let's avoid that. So if you didn't live in Grand Prairie, if you didn't have work there, would you invest there? Do you have plans to invest further?
I'm not sure, to be honest. It's a great rental market. Even my dad was telling me it's a pretty unique market because where I'm at in Kelowna, like trying to get a huge return on your investment from rent is really difficult. It's like being in Vancouver because the property values are so elevated.
Mm-hmm.
Trying to get that rent to pay off like all of your expenses and the mortgage payment is pretty difficult. So that's good about the Grand Prairie market, but you don't get that much appreciation. So I would probably want to focus on a market where you see more appreciation, like Kelowna or Vancouver, ideally. And living in those cities would be a lot more ideal.
Mm-hmm.
So like in the future, maybe getting some apartment downtown in Vancouver would kind of be the dream, or like building a house in Kelowna. That'd be pretty cool.
Pretty cool.
Yeah.
This is it's interesting and refreshing, because a lot of real estate education that's still out there, and I've been following a lot of these schools for forever. A lot of them teach like cash flow. But in my experience, the return has all been in the price appreciation.
Oh, has
Right?
it?
Well, yeah. Just think, if you bought a piece of real estate 10 years ago in Vancouver, right? Say you rented it out, right? Where was the returns? If you had a pie, how much of the combined returns would have been from cash flow? Likely not a big slice of the pie, versus equity gains from price appreciation. It'd be very significant.
Exactly.
Right? Like, I imagine it'd be like 75% of your gain. The equity gain would like 75% of your total gain on the property.
Yes.
I'm just guessing. It's probably somewhere around there, maybe even higher. But yet, so to be honest, many listeners won't know anything about real estate in Kelowna. So let's take your Grand Prairie. Let's take your Grand Prairie example. How much would that property be worth in Kelowna?
Oh boy.
Double?
Yeah. The average home price now in Kelowna is above 900,000.
Okay.
So I just heard that statistic like last week. So it's pretty crazy. The average home price in Grand Prairie is like 300 or yeah, it's like 310,000 or something like that. So I'm at about average in Grand Prairie. So it could be double over here in Kelowna easily,
Yeah, easily.
depending on the location.
Right.
Yeah.
And then what? And then I know we're just guessing here, but what would you guess the rents would be then?
Well, my parents have a property that's similar. It's like an up down, but it's not legal. I think they're making maybe a little bit more in rents, like
Just a little bit more, right?
1,200. Yeah, but they bought the property a long time ago and they haven't increased the rents too much on the tenants. So I don't know. I think they could probably get a lot more. Yeah, honestly, not a whole lot more. I think, yeah, the main thing about Kelowna is just like price appreciation, like Vancouver. But I think the rent for like a single bedroom, single bath would be 1,400. Yeah. So maybe that can put some perspective onto it.
So maybe like 20% more in rent, but it's 2x the price.
Yes. Yeah, that sounds about right.
Very cool.
So in Ontario, is it kind of like that?
Yeah.
Like Kelowna's market?
Yeah. So I invest very heavily about an hour west of Toronto. And so my properties they've caught up a lot in terms of price. But yeah, my properties over probably around 60, 70% of what it would have cost in Toronto. It's caught up a lot. It used to be well under half, right? The price delta between in Toronto versus Hamilton, it'd be well under a half. But the way how affordability works, right? Toronto's like ultra expensive, just like Vancouver. So the price appreciation's slowed down a bit versus whatever's considered affordable. It's caught up in price more. I imagine the same thing would probably happen in Kelowna. Like the Kelowna house example, if it's 700 grand, yeah, it's probably like 1.4 in Victoria in Vancouver, right? But yeah, we see similar. Like any investor who's, and I've said this to before, and I don't mean to beat up on certain markets in Canada, but if people bought in high appreciation cities, they would have done very, very well, right? If you bought in the Greater Vancouver area, Kelowna, I imagine you've done really well as well, or Toronto.
Yeah,
right?
I mean, you wouldn't even have to rent it out. In some cases, just hold the property, and that's why you get a lot of those worldwide investors, like a lot of Chinese investors, investing in Vancouver. And then recently, Vancouver, or I think it was the BC government, put some speculation tax on properties. So if you don't have the property in rent and you're just holding it, then you're subject to the speculation tax, which could be 1% or 2% of the property's value per year.
Yeah.
And that's to avoid these worldwide investors just holding the properties and not having it in rent and basically just wanting that price appreciation. Yeah.
I don't know anyone doing that. Every investor I know needs the rental income to at least cover the mortgage.
Yeah.
And a REIT just recently reached out to us, a small REIT, but they're looking to buy, I think, something like 60 properties over the next year or two. And they're buying single family to duplex them, or they're buying existing duplexes. Right? And they're buying like crazy, and they're a REIT, right? Yeah, because the price points these days for a duplex. So, for example, a duplex in my house, so your Grand Prairie property would easily be 900,000 in my market, right?
Wow.
And it would rent for and that's what I buy. So, for example, I got 2,400 for the upstairs, and 1,800 for the basement, right, in Hamilton, Ontario.
So rents are quite a lot higher then, but not up to the point of the property value.
Correct. But it's a bit different here in that because my market is only an hour from Toronto, I'm getting Toronto people who have Toronto incomes renting my property. Right. So it's not like, and so like literally, so for example, I've owned similar properties for over 5 years. So the rents 5 years ago were like 1,600 upstairs and like 1,300 downstairs. Right. So stay with the upstairs example. I think I get even less than that. So let's say 1,600. I used to get 1,600 maybe 5-6 years ago for upstairs. Now I just signed for 2,400.
That's crazy. Right?
Incomes haven't actually gone up. It's just the tenant's different, right? Versus someone local, I'm getting someone from the big city.
Right.
Yeah,
that
so
makes sense.
That's how things have worked out here. And that's why I continue like to want to invest within an hour of Toronto, right?
Mm-hmm.
Yeah.
So it's
Then I
kind of
always
like
get the benefit.
kind of like the further away from Toronto you get, the cheaper the property values are, but the closer you get, the more expensive it's going to be on average.
Yeah, that's exactly it. Yeah.